Well, thanks for joining us today. It's Friday. Thank you so much for allowing us to be a part of your day. We look forward to talking with you about the markets. I'm Marlon Bowling, your tour guide to the ag trade, and well, we're going to talk with Brian Hoops right now. He happens to be the president of Midwest Market Solutions. Now, we happen to catch him on the road here this week. Understand you've been traveling out and about in the western part of the Corn Belt. Did you, by chance, happen to come across any harvest activity?
Yeah, good morning, Marlon. Yeah, I'm actually in Sioux City, Iowa this morning. We're out doing branch office visits and seeing a lot of harvest activity. So there's quite a bit of corn been combined, especially like northern Missouri and southern Iowa down around Council Bluffs, Omaha area. So yeah, a lot of corn starting to come out as we got farther north into northwest Iowa. Really not that much that you can see, but there'll be more harvest activity as the weekend progresses and into next week. But very little soybeans been done. The leaves are just not turning and dropping off the crop yet. So a lot of the crop was planted a little bit later this spring, and even with the heat and dryness, we're not seeing that much harvesting being done, at least on the soybeans yet.
Okay, I'm going to start out our discussion here this morning by talking about things a little more on the outside of the grain trade. For one thing, did you happen to notice overnight what's been going on with the Dow? Gosh, I'm sure you have. All eyes have been on that, and ever since the Fed increased their interest rate. So let's take a look at the Dow. Boy, oh boy, December futures on the Dow Jones Industrial Average down 309 points right now at 29,840. So they just obliterated that 30,000 benchmark and went well under it. And on the other hand, you look at what the value of the U.S. dollar is doing. On the dollar index, Brian, check it out. December futures, 725 points higher at 111.830. It got as high as 112.105. Well, as long as I've been broadcasting, I don't think I've ever seen a market that high. It's been a long, long time. That has got to be putting some pressure, you would think, on some of the ag trade. Also, in the crude oil market, wow, November futures down $3.76 a barrel at 79.73. Gosh, it doesn't seem very long ago. We were up around 120. So what does that all do with the grain trade here this morning? Well, here's an example, and Brian mentioned that he saw some harvesting taking place. December corn down 14 cents today at 6.74 1/4. In our soybean trade here this morning, we have November down 18.5 cents at 14.38 1/2. And in the wheat market in Chicago, you have December down 18 3/4 at 8.92. On the Kansas City market, you have December down 14 at 9.65 1/2 this morning. Minneapolis spring wheat overnight, December down 14 1/4 at 9.63 1/2. The thing that really caught my attention here, Brian, is the fact that they are all down roughly about the same amount. That seems kind of odd to me. It doesn't matter if you're talking wheat or corn or soybeans, and they're in opposite ends of the growing season right now.
Yeah, so what I think this tells us is, the overnight weakness has probably very little to do with harvest activity or yields or anything like that, supply and demand numbers. You look at the crude oil, it's down 4% from yesterday's close. It's in recessionary type fears that's really pressuring the crude oil market. It's driving the U.S. dollar higher. It's pressuring our stock market. So we're coming into the morning session here after the overnight has closed. We're looking at very likely, maybe some sort of a little short covering bounce just after the opening, some bargain hunting coming in, because, we're really not hearing the yields to justify such a big drop in the grain prices overnight. We thought there would be some seasonal and harvest weakness weighing on these markets, but a lot of it has to do with these outside forces, the stock market being down with the Fed hiking interest rates this week, as well as the crude oil market being down 4% overnight.
Has basis peaked, do you think, out in the country?
Maybe temporarily in a lot of areas, especially where the crop has been very good. It's probably as tight as it's going to get and widen out just a little bit until we get through harvest. But, in the Western belt, I don't think so. I think the crop's going to be small enough there that we're going to see a tight basis through harvest and all the way through the winter.
And of course, we still don't have any ratification on any rail strike talks. They haven't ratified that contract yet, and that is a big question mark right there. That could really put a dent in things.
Yes.
We'll pause right here, and Brian, we'll come back and discuss the setup on our livestock trade to wrap up the week. Remember, we have a cattle on feed report coming out after the close today. We'll discuss when we come back. Well, we're back talking with Brian Hoops of Midwest Market Solutions. Now we're going to switch over and take a look at the livestock trade. Earlier, we had discussed what's going on in the equity markets and the economy as a whole. Things looking a little bit dire here as we get to the end of the week, especially after the hike in interest rates. And it sounds, Brian, like we're not going to be done with that for a while either. We may see more of that. Things are probably looking a little bit tenuous, maybe on things like the meat markets here.
I think it's very possible. Yeah, we're to see additional weakness not only in the stock market, but concerns about the economy as we go into the fall and the winter months. There's a lot of people that we've talked with around the country that have received letters already from their utility companies about prices of natural gas going up. Their utility bills expected to increase compared to a year ago. So it's a concern all over the country. We talk about demand for both our beef and pork sectors and being really key for our markets. Exports that came out yesterday were pretty decent for both, pretty much routine. There was also a cold storage report out yesterday afternoon. It showed a 1% increase from last month in both beef and pork stocks, but year over year, we saw a big jump. So maybe the coolers that are getting a little bit more filled up are not drawing down like they normally would be when you compare it to a year ago levels. So that I think that's a little concern about consumer demand, maybe especially on these higher end type of cuts.
Well, you talked about the livestock trade, and we did have some pressure yesterday. Let's see how we finished up. And we'll use that as a reference point for today's trade. Let's go to live cattle here first. Yesterday, we finished up with the October down $1.02 at 144.85, and December was down $1.40 at 149.35. Now that October at 144, I want to bring up that livestock summary from yesterday just to kind of compare. Out in the country, it looked like we had some trade that was generally in the lower 140s. From what I understand, Brian, I think the prices it shows 142 to 145. Generally, that's going to be roughly what, on average, maybe $1 over what we had a week ago?
Right. Yeah. The trade, in the Southern Plains as well as the Northern trade coming in $1 higher on a live basis and probably $1 to $2 better on a dress basis. So the cash trade that developed pretty much as expected and supportive to the market. The flip side of that is lower stock market, probably going to drag down some of these cattle futures, hedging pressure weighing on the market as well. Now, we'll see if feeder cattle can be strong enough to lift a live cattle today. They should be higher with the lower corn values. But again, that market's really in a down trading market. So it looks like a kind of a dead cat bounce in the feeders. And that may attract some hedging pressure as well with the concerns that we've been talking about with demand and possibly the economy.
That's a good point. October feeders were down $1.25 yesterday at 177.97. But you had November and January over $2 lower. They had quite a bit of pressure. And on lean hogs yesterday, we finished up with October down 30 cents, December down 77 at 85.67. I noticed the cash hog market was lower yesterday by a fair amount.
Yeah, unfortunately it was. The hog market here has seen a big drop in the cutout values as well. I didn't see what they did last night, but the night before it was over a $4 drop, and that hurts, the packer margins. We've seen cutouts dropping in the cattle market as well. So again, we're really dependent upon demand during this time of year for both beef and pork, and we're starting to show a little bit of weakness in the demand for hogs, and that's unfortunately probably going to weigh on this market.
Okay, great information. Thank you, Brian, and best wishes for a good weekend. Safe travels out there. Brian Hoops of Midwest Market Solutions. So there you have it, Janet. A lot of pressure in the markets overnight. We'll see what happens on the open at the bottom of the hour.